Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, I started on the hourly chart because I think it really helps to illustrate what's happening in the S&P. And if you didn't catch our webinar yesterday, we were going to do a general market outlook and Q&A. What I ended up doing was an hour-long how and what to trade in a low volatility environment. So for the particular markets that we're in at this moment, it's very helpful, and it's very helpful for the next time we end up in a low volatility environment, because despite popular opinion, low volatility environments don't last. This one won't last either, and we may be getting the expansion of daily ranges as we speak. So what we see here is the last two Monday mornings there have been, or Monday afternoons rather, there have been very lazy tests of the weekly pivot. Monday here, we did 50.75. Last Monday, we did 39.25. Both of them bought, both of them ended up being the highs for the week. Now, whether that ends up being true this week, I don't know. We got a few days left, but for now, it's the low, it's those Monday afternoon tests of weekly pivot have proven to be the lows of the week. So how is it being handled? The dips are being bought. You're seeing things go support, higher lows and higher highs. As you get out on the daily chart, you just see this lazy move up along the 9-day simple moving average, which we figured would be tested. The closest test so far was back on October the 13th. It's held as support. We're seeing new all-time highs this morning. That upper band is a ways away. So you may not see a bolt up to the upside, but you won't necessarily see a bolt to the downside either. What I did say yesterday in the webinar is that expansion can come in either direction. Everybody's assuming that when the volatility comes back, it's going to be a retracement. Now, that's the more likely scenario, and I don't think it's going to be the great and glorious retracement that a lot of people think. I think if you get back to the daily midband and it holds, that may be all the retracement you're going to get, absent some kind of news or other shoe or something that's going to motivate this market. What you could see, though, is a quick down move to test the lows of the week, and then upside for the rest of the week that expands upward. It's certainly compressed enough on the daily chart to do that, and we may be just breaking out of this compression. If you look at the candles here versus candles back in the summertime, you can tell just by the naked eye how much the ranges have reduced. That's not sustainable. Just like ranges that have 20 and 30 handles every day aren't sustainable either. I expect us to start settling back into 12 to 15 handle daily ranges, and that's more than tradable. What are we doing in the room? We're trading other things. I've been trading a lot of gold. I've been trading oil. We're always trading NQ with Tony. So the other thing I would say, and please watch the webinar because I think it's helpful to get everybody's head where it needs to be in trying to trade this type of environment. If trading low volatility S&P is not your thing, there are plenty of other instruments that you can be trading, and we're looking for those opportunities every day. And what it does is it gets you out of the mindset of I have to do this, I have to do this. Plus you broaden your skill set as a trader, so the next time this rolls around, or even while the S&P is moving, you can be doing other things as well. Don't get honed in too much into doing, I can only trade one thing. There are environments where you can do that and do very well. This is not that environment. You have to diversify a little bit and try some other instruments. Gold is the primary one that we've been using in the room. Okay, so for today, well, you got to watch daily pivot. You got to watch the hourly midband. You got to watch 57. 57 held up through the Europe Open, and they've hopped up to 61 out of the top of it. As far as the upside goes, I've got levels at 62.5 and 67. Those could be reached today if it gets moving to the upside. But most importantly, if it comes back down and starts doing that morning dip, as tempting as it is, if you're going to be short, then that short has to perform. If you're in a short that's not performing, you need to get out of it. You can be in a long that's not performing a little bit and give it a little more leeway, because ultimately the trend is to the upside and that entry will correct itself. But if you make a decision that you want to be short in this market, then you better have a good entry, you better have well-defined risk, and your trade better perform. And if it doesn't perform, you need to cut it. Not for something big, but for something small, and then you need to get in tune with what the tape wants to do, which is to head higher. And I will leave you with this. I am not a perma bull. I am not a perma bear. I don't care if it goes up. I don't care if it goes down. I just want to be on the correct side of price. What this is still saying to me is higher lows, higher highs. The dips are being bought. It doesn't matter what you think or what you want or what you feel. The market will correct on a volatility basis when it's ready to do it. Until then, make the adjustments you need to make as a trader in order to succeed. All right, everybody have a fantastic day. I'll be back for a midday update. I'll see you then. Trade 'em well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.